Hi, folks. Dan Bird here with the daily scan for Monday, May the 12th. And what a day it was. The market exploded higher. So started going lower because of the trade war, and now it's going higher because of the trade war. And it probably will get better from here. We've got the summer we have to get through, but we'll see if more more talks about tariffs and getting deals done is going to help the market move higher. We'll look at all of that today. And of course, Max Payne. This Friday is options expiration day. So I'm going to show the Max Payne report and see what it might be telling us about the direction of the market. I'm not so sure it's going to be accurate this month, but we'll get into that in a minute. As always, I am not a financial advisor, so nothing that I say here is meant as a recommendation to buy or sell anything. This is just for educational purposes. All right, let's take a look first on the home page. You can see the market bias chart is continuing to explode higher. And this has been amazingly accurate. I didn't realize when I first started putting this together a while ago, I wanted to actually have something that would reflect all of the different asset classes in the market. And do it in a way that you could see the market moving, going from bearish to bullish or bullish to bearish, that type of thing. But I didn't realize how accurate it was actually going to be. So you can see right down here was the bottom. This is where it started to move higher, and it had a big, huge explosion right there, even before today's explosion. And the way this is put together is on the market bias page. This is for subscribers. You can see all the different asset classes. So indexes, sectors, industry groups, intermarket relationships, commodities, metals, and currencies. And whenever they change from a short-term or short, medium, and long-term basis, and they make a move from bearish to bullish in each of those categories, then it gets a box around it so you know that it just happened just that day. So look at all the green boxes we have right now. Nothing but green. In fact, there are no red boxes on here. So nothing changed from bullish to bearish today. Everything's going bullish. And on the right-hand side in the middle, you can see the day over day and week over week trend. So if it's higher day over day and higher week over week, which overall it is, it gets a green. If in the short term, medium term, and long term, you can see the long term is lagging, but that's typically how it goes. You can actually see all three of them together down here, and you can see where the short term really started to explode right through here, even before today. And the medium term started going up as well, even as the long term fell, but now it's just going flat, going sideways. So that's the way it typically moves. And this has been extremely accurate to help you understand where the bottoms and the tops are happening. You can see the trend line right here is curving up now, starting to move higher. And these are going to get more green boxes the rest of the week. As I was putting this together, I noticed that there were a few of these in here that were 1 or 2 days away from changing to bullish. So we probably will get even more acceleration to the upside. So that's good news. Let's take a look real quick. Just before I get into Max Payne, which I'll do here in a minute, I want to go back over here and show us where we are so far. And what you can see is this is for May. We are here. CPI comes out tomorrow morning. And I talked about this over the weekend with Zuber, for those of you that subscribe to his channel, One Rental at a Time. If you want to get more data on real estate specifically, and then I do a session on Sundays with him. But we talked about CPI, we talked about inflation, and that the CPI report is forecast to go down 0.3 from here. I'll just show it. But it's going to go down more than that, I think. And if it does, then the market may actually explode again tomorrow and continue its run higher. So if we look here on CPI headlines right here, for those that are subscribers, it's in the left-hand column under economic charts, CPI headline. And you can see there's a big one that's dropping off the 12-month average window. And when a big one drops off, then CPI comes down up here. So that is going to happen. It's going to be bigger, I think, than the 2.3 that they're calling for. You can see in just 2 months, February, March, and April, those are the 3 reports that we've had so far. This will be May. So we went from 3 to 2.4, so down 0.6% in just 3 reports. So it's not out of the question that we go down to 2.1. That was the call that I made yesterday. Doesn't mean I'm going to be right. We shall see, but everything is looking like inflation is coming down dramatically. If we look at commodities, another indicator, and this highlighted area is what will be reported on tomorrow morning. You can see everything is dropping like a rock. DBC are all of these different commodities over here. DBA is mostly food, agriculture. That was pretty flat. Copper dropping. CRB are all these over here on the left, dropping. Gasoline dropping, oil dropping significantly. You can see they're all starting to come back up this month, but that's not what the report will be for. The report will be for last month. So everything is dropping like a rock. In addition to the base effect, I think we are going to get a very good inflation report. Much to the dismay, perhaps, of those that continue to say that tariffs are inflationary, and I have said that they are not inflationary, and I think tomorrow's report might just prove it. Of course, I could be wrong. So I've been wrong before. So we shall see. But anyway, keep an eye on that. All right, the next thing here is the 2018 trade war. How are we matching up with 2018? Well, we actually are looking pretty good. We are almost following it to a T. So you can see right here, 2018, we had the trade war primarily with China. This time was with most of the world. But in 3 months, we dropped about 20%. This time in 2 months, we dropped about 21%. Then we hit the bottom. Then we came up and made a higher low like we did here. And then we continued higher. We had a consolidation period right in here, which we're just coming out of right now. And then it continued higher back to the highs. So does that mean we will get back to the highs? Well, we'll take a look at something. We'll see. Maybe that will happen. All right. So let me, as I'm on that subject, before I get into Max Payne, let's go back over here and take a look. Let's revisit the Santa rally. So if you may remember way back in January, the Santa rally the January barometer is made up of 3 components. This was created by Stock Traders Almanac, which I'm a big fan of. That's where that month trend came from. So the January barometer is a Santa rally, which is the last 5 days of the year, and the first 2 days of the new year was down 0.5%. First 5 days of the new year was up 0.6%, and the full month of January was up 2.7. Usually when 2 out of 3 of these are positive, the market ends higher. Does not indicate how much higher, just that it will be higher. That's normally historically what has happened. But we had this huge sell-off right here, starting in February, came all the way down. I drew this trend line long ago. We've broken through the trend line. The short-term signal is up. We just had a medium-term signal just today, in fact. We got a medium-term signal up, and it's blasted off. It's above the 200-day moving average. It's above the cloud. So can we get back to the highs again, which is at 6150, roughly? Well, let's see. Using consolidation theory says when you have a big run-up, and then you consolidate sideways for a little while, then the distance to the next target is the distance from the midpoint of the consolidation from the low. So the low is back here at 5,100. The midpoint of the consolidation was at 5,650. So that is about 550 points. So if we add 550 to 5,650, guess what we get? 6,200. So yes, according to consolidation theory, we absolutely can get back to the highs again. Will we do it in the next few weeks? Probably not. But will we do it by the end of the year? I think it is highly likely that that could happen. So we'll see what happens with CPI tomorrow. If it's a positive number, this may actually go higher again. At some point, we're going to consolidate and even come back down, maybe over the summertime. Summertime typically is a slow period, so we'll see what happens. But that's the January barometer, which we haven't looked at in a while, and we're starting to come back up again. All right, let's take a look at Max Payne. So Max Payne, for those that this is a new concept for you, Max Payne is nothing more than trying to find the equilibrium point between puts and calls for options. So if everyone's bullish, they're buying lots of calls. And if everyone's bearish, they're buying lots of puts. So the Max Payne, which is options expiration, so for the market makers to save money, not have to pay out a lot of premium, they would like for the price to get back to where the equilibrium point is between puts and calls. So if there have been more calls lately, which there have been the last couple of weeks, market's been going up, so more call buying. That means the market should come down in order for all of these calls to expire worthless and allow the market makers to not have to pay out all of that premium. If the market had been going down, it's the opposite. Then for the market makers, they would like to see the market go up by options expiration so that all of those put will expire worthless and they won't have to pay out all of that premium. So that is, in a nutshell, what Max Payne is all about. So now let's take a look at the report. And before I go to the report, I want to give a shout out to Tom Bowley and Earnings Beats, because that's where this report comes from. And I cannot show this report without giving him the justice that he's due for doing all the work and putting it together. He actually explains, when he does his Max Payne report, he explains how he does it, how he puts it together. It's basically from CBOE reports. Anybody can do it, but he's spent the time and put it together. And if you are a subscriber, you can actually get the spreadsheet so you can calculate Max Payne for anything that you want. So this is his website, earningsbeats.com. That's Tom Bowley right there. He's doing a webinar on a free one on Saturday about building a winning portfolio. I highly recommend you take a look at that. Got lots of things, education, research, guidance, great history of success, lots of good members, great community. There's the pricing. And then he does some teaching as well. He uses stock charts as I do, and he helps you understand how to identify what the charts are trying to tell you, which is what I do too. So this is where the Max Payne report comes from. I encourage you to check it out if you're interested. Now let's take a look at the report and see what it says. So here's this report, just came out today. This is for as of the close on Friday, which actually is very, very interesting. I'm going to open up a separate window so I can actually look at the individual stocks. I'll put this down here so I can take a look at what the stocks look like. All right, so let's go back to the Max Payne report and take a look. He explains how he does it. There's Tom, that's his daughter, Erin. They're also not registered advisors. So here's Max Payne. So this month, as I said, the market had been going up, so you should expect Max Payne to be the opposite, meaning the general trend. Now, I want to make sure to point out that this does not mean that we will hit these numbers. We will not necessarily hit the target, the Max Payne target. This just basically gives you an indication of the direction of the market between now and Friday, and it actually carries over into the first couple of days of the next week. So interestingly, Max Payne in this case is down to 539, but that probably is not going to happen. since today it closed at 583. So I doubt that's going to happen. I don't think Max Payne is going to come through this month, unless we have a huge sell-off, which I don't really foresee. I mean, if CPI really comes in, let's say, higher than everyone expected, then yeah, the market could sell off with that, or some other unseen event happens. But right now, I don't see that happening. So the Qs, the target is 460. They closed today at 507. I don't think it's going to get there. He also have Max Payne for all of these other individual stocks. And remember, it's the calls versus the puts. You can see the net call put premium over here. This is the net. After you take all the calls, subtract all the puts, this is what you end up with. This is what the market makers stand to lose or pay out in premium by Friday. Or said another way, if the market actually does go down, they can save all this money. So Tesla, let's actually look at Netflix because it did go down today. And Netflix was down to 1110. So the Max Payne target is 1025. That could actually hit there. That's one of the few on this whole list, I think, that might maybe even make it. But everything else, these are all at the top of the list because they had the most calls, which means in order for them to hit the equilibrium point, they would have to sell off. So that's what it looks like. You see all the Magnificent Seven right there near the top. All of those have had lots of call buying in the last few weeks. If we look at the bottom of the list, we can see the ones that have had a lot of put buying the last few weeks. Marvell was actually the worst stock in the large cap. And for it to hit Max Payne, it would need to go up to 61.72. Let's see what Marvell did today. All right, Marvell's at 64.50, so it's already above the Max Payne point. So directionally, that one actually is falling in line with Max Payne. Let's look at ARM Holdings. These are the ones actually that could actually do well. The ones down here. So ARM, the Max Payne target is 120, and it's at 124 today. So yes, the ones down here's Pepsi, one that a subscriber asked me to look at. Just so happens to be down here because Pepsi has been selling off quite a bit lately, and I actually will look at it right now. So Pepsi is at 131, so it's a little higher than Friday, but not quite to the Max Payne level. Here's the chart for Pepsi. Right here, it did have a little bit of a bounce this morning, but notice how everything, and the point that the subscriber was making is that it looks like it's on a weekly chart, it looks like it's near the bottom. So there's the weekly, or at least near support. So I would put support probably right about here. So yes, it is right at support on the weekly chart, right there. So yes, that could be an area where it has a nice comeback. And he also said on the monthly chart, it was near support. So here's the monthly chart. And I would put the support on this one probably right here. So a little more to go, probably down to 120, 125, somewhere like that. And if we go back and look at the Max Payne report, for Pepsi, it's 137. So according to this, it looks like directionally, it might actually get a bounce, might actually go up this week. So keep an eye on that. So that's Max Payne. That's how it's put together. That's how it works. I don't think it's going to be accurate this month, but you never know. Never know what's going to happen the rest of the week. And remember, this carries into Monday and Tuesday of the next week. So something could happen over the weekend that would have everything sell off. But I don't really foresee that. I don't see that happening, actually. So let's go back over here and take a look at the VIX, because the VIX is now finally below 20. So the VIX is way down. You can see today, I talked about this last week, how it had continually come down, which means that the market in general was not concerned too much, although it didn't get below 20. and above 20 is where the bears are in control. Well, it did today. So today it's in that neutral zone in between 17 and 20. It hit 18.39 today. The rate of change is pretty much flat, and the moving averages are definitely crossing to the downside. So that is good for the market to have the VIX going down like it is as the market continues to go higher. So that is a good sign. Okay, let's go back and take a look on the homepage at some of the individual charts. Get the S&P. So this is the consolidation right here. And tomorrow I'm going to talk about the Darvis box from Nicholas Darvis for Technical Tuesday, but we've already broken out. So I'll explain what that means from Darvis's perspective tomorrow, but we've already broken out of that box and we're right up here now with a very strong candle. So it ended the day near the highs. So that implies that it could continue to go higher tomorrow, and with a good CPI, I think that probably will happen. If you remember a few weeks ago when I showed you this potential inverted head and shoulders on the RSI, implying that the market was heading higher, and certainly is doing that. It is not up to overbought territory yet, which is above 70. So it still has room to go, and it could stay overbought for quite a while like it did back here. So there's still room for the market to go higher. We'll see what happens tomorrow. NASDAQ 100, same thing, sitting right up here. Nice hammer, even though hammers you want to see at the bottom of a run, but right here it implies a continuation pattern. Again, ended at the highs, so may continue to go higher tomorrow. Is not above 70 yet, so it is not overbought. Could stay overbought for a while, but it is not there yet. So that is good news. And Bitcoin, one subscriber asked me to put the Fibonacci's on Bitcoin. So I put them now on this chart. I have two Fibonacci levels on this one. One is from the low right here. That's the blue one. The other one is from the low way back here in October. It's not on the chart. It's way back in October. And that's the red lines. So where you find lines getting close to each other, like right in this area here, that is a pretty good support level. So you can see that, interestingly, Bitcoin went right up to that 106 level, which is what I said last week. As this was going higher, I said 106 was resistance. That's where it's probably going to run into trouble. And I even said last week, all these people back over here that were buyers just want to get out at break even. So it hit 106 almost to the tick. In fact, what was the actual number? The high was 105,783. So not quite 106, but pretty darn close. And as soon as they hit that, it started to come back down again. So we'll see if that continues. You know, these buyers want to break even, so they'll probably be selling, and we might get a consolidation through here. But the area for the Fibonacci that is the key support level is down here at about 94,000, right about here. So you can see the blue one is at 93.8 and the red one is at 93.2 roughly. So somewhere around that area, just below 94. And then the next major support level is down here at about 86,000, right down in here. But this is probably the key one. There's one right here at 98 as well. That's the first blue Fibonacci level right here at 98. So that actually could be where it comes down to during the consolidation and then takes off from there. But this 106 level is really strong resistance. So Bitcoin's not going to go anywhere until it gets through that 106 level so until it closes above that. You can see over here it got through it a few times, but never closed above it. So it needs to close above that level for a couple of days in a row, and then it probably will take off and go much higher. And if it follows along with the rest of the market, that could happen. So that's what Bitcoin looks like. We'll want to show you the liquidity chart. to see what liquidity is looking like, especially with the way the market has been acting lately. So this is liquidity. Liquidity basically is the top four components. Bring that in a little bit. So the top four components up here is the dollar, 10-year yield, oil, and commodities. They had been coming down. They're starting to tick back higher now. So that pulls liquidity back out of the system. Oil in particular and the US dollar in particular, you want those two to continue to fall or at least flatten out and stay down there. These are the moving average lines for each one of those, which are, I think, 50-day. Yeah, those are 50-day moving averages. So 10 years above it right here, but oil and the dollar is below it. So as long as it stays below it, then liquidity should be just fine. Commodities also below the moving average line. And you can see down here the VTI is starting to move higher. So all of that is very good news. By the way, on the portfolios page where I have the market timing strategy for subscribers, you can look at this every day. It gets updated. Right now, it is in a long position since May the 5th. This is something that can be used for 401ks as well. I actually updated the instructions up here, explained where the short, medium, and long-term signals come from. And down here, you can see if you use the leveraged ETFs, either up or down, long or short, then this shows you what the current trend that we're in since May 5th. So today's May 12th, so that is 1 week, only 1 week. So this clicked over to long just 1 week ago, and it's up 3.6%. If you were in the 3X, you'd be up almost 11% in 1 week. So pretty darn good. So that's what that looks like. I also run the dividends, scans for dividend stocks at the beginning of the year, and then I update this at the end of the month. And all of these are still positive. And I'm quite sure, even more positive today, but I don't run it until the end of the month. So we'll see what it looks like at the end of May. So that's what things look like. Everything looks very bullish. Things continue to go higher. So that's good news. One last thing, and I'm going to probably start doing this again, since this is called the daily scan. I probably will actually start doing a daily scan. But we can actually run one and see what we get today. Let's run the one for weekly optionable stocks daily scan, the 5 crossing the 21. I modified this a little bit as well. So Apple right at the top. So we can look at these. Apple had a nice run up right there. Affirm Holdings is in there. So you've got a daily on the first two over here. The one in the middle shows the Fibonacci. I'm sorry, not Fibonacci, but the Keltner channels, Keltner levels. So when it gets up to the red one, then it is very overbought, very extreme, and usually reverses like it did back here. When it gets to the lower red one, it reverses and goes back up. Right now, it's just a little bit above the mean, a little bit above the middle. So again, still room to move. So you can just look at the stocks over here. If anybody wants to check these out on their own, here's Fortinet, which had, I think it had earnings right here, sold off, and now it's coming back again. It's revert to the mean right there. Google is on the list. So Google's making a comeback. Lowe's, looking nice, coming back. Macy's, right there. Black candle. Here's Nike. Nike has a spinning top right below the 50-day moving average, so could be a reversal. We'll see. Novo Nordisk is in here. Had a nice reversal today and ended at the high, so it might continue to go higher. It's right below its 50 days, so it's got a lot of work to do to get above that. Pfizer on here. All of these have weekly options, by the way. So if you want to play these as an options play, in particular, you could sell a put and just keep the premium. Sell a put for Friday and keep the premium. I talked about that before, but I'll cover that again maybe in the next Technical Tuesday. So Roku looks really good. It's above its 50-day right now. Starbucks is on the list. Shopify looks nice. SMCI trying to make a comeback. SMCI doesn't look that impressive, frankly. Didn't really make a big move today. Atlassian team had a nice move above the 50 today. Block down here. So that was just for today. That's the scan just for today. So I will start to do this again and then start actually tracking some of these. I'll pick one or two each day and I'll track them on a spreadsheet like I did previously. And what we can actually watch them. I'll show you how I would set a stop, how we would exit the position, get in the position, etc. And usually I actually do that in my account so that it will be a live trading type scenario, although not live like in real time, but after the market. We'll take a look at it. So that's what the daily scan looks like for today. Anyway, everything looks very, very bullish. We'll see what happens tomorrow. It's going to be really important with that CPI report. That probably is going to set the direction for the rest of the week and blow away Max Payne for this week. All right. Thanks for watching, everyone. Thanks for all the notes when I was on my road trip. Thanks for folks telling me, when I was close to them and wishing me well. I really appreciate it. I love reading the comments, and please post some more. If there's anything you want me to look at, any particular stocks or charts or anything like that. And we'll see what happens tomorrow. I'll talk to you again tomorrow night. Thanks.